Welcome back to another episode of Standpoint. I'm Gabe Groisman, and I'm excited to welcome with us today here in the studio my friend Gabe Plotkin. We've got two Gabes here. This is a special episode. I know I say that a lot, but that's what I try to do, bring special episodes. This is the first episode, number 26, if I'm not mistaken. It's our first one that's not political. So if all you want to hear about is politics, this is not your episode, but life isn't only about politics. It's also about people. It's also about friends, and it's also about markets and finances, and everyone's trying to take care of their families. Gabe is the founder of Tallwoods Capital, lives here in Miami Beach. He runs his family office. He's a part owner of the Charlotte Hornets, which we'll talk about. The dream of, I think, every boy on the planet to own a basketball team. Former founder of Melvin Capital, a hedge fund, and he's got a great, amazing background and story. And Gabe, thanks so much for joining.
Thanks for having me.
Dude, first of all, it's been a long time coming. A couple months we've been talking about you coming on the podcast. You've always been game. It's just the schedule. You're not an easy guy to get. So thank you, man.
Anytime.
First of all, how's your move been to Miami?
Miami's great. Really happy I live here. We moved here during COVID, and at the time it was a big change in our lives. I think my wife was expecting us to move back, and you get to Miami and the sunshine and the community, and it's just great. So we've been really happy here.
You get to rock a t-shirt and jeans and no socks, and it's like
I don't
normal.
even own socks at this point.
So I'm wearing a button-down shirt. I've got to go to a fancy event after this. I've got a suit, but I left the jacket over there. I spent 15 years litigating cases, so I was wearing suits and ties. And when I was in politics, suits and ties all the time. But Miami jeans and a t-shirt, you don't need it anymore. So Gabe, last night was a lot of fun because I was preparing a little to have you on the podcast, and like I said, every man is a boy trapped in a right. man's body. And watching in August, you do a press conference leading a group of 20 investors, as far as I understand, to buy a majority stake from the Charlotte Hornets. You bought the stake from Michael Jordan. So it's kind of cool upon cool upon cool. How'd you end up there? How'd that even happen?
Yeah, I actually initially bought a stake in 2019, and so as my career in finance was progressing, I was very focused on just doing my job, trying to invest, do the best I could, but over time it led to a lot of success. And one of our salespeople was great friends with Dave Checketts, and Dave Checketts used to be the CEO of the New York Knicks and the New York Rangers, actually. And so he had him come in, and Dave's, I started talking to Dave. Dave's like, wow, you really love basketball. And I was like, yeah, I do. It's like, I think there's an opportunity to buy a stake in a certain team. Like, you should look at it. I said, okay. And, I kind of went down the path, and it was a dead end ultimately, but it kind of planted a seed in my head. Like, how awesome would it be to be a part of a basketball team?
That was with the Knicks?
That wasn't with the Knicks, actually. It was
another
they were in a seller at the time, but it ultimately was with the Pacers. And he thought they might be a seller, just given the age of the owner, and they really were not.
By the way, you're in Miami now. If you would have owned the Pacers, it would have been problematic. We're not really friendly with the Pacers in Miami.
Knicks too, right?
Correct.
But ultimately, at the time, the Carolina Panthers were for sale, and I understood that. There was conversations where maybe the potential Carolina owners would buy a part of the Hornets, and the Hornets might buy a part of the Panthers, and so it just became known that there might be an opportunity to buy a part of the Charlotte Hornets. And so I started doing work on Charlotte, and I'm like, wow, this is a great city. They love basketball. North Carolina's it's basketball country. The team has not been very good, but the city's great. The fans love it. The weather's great. The business climate's great, and so I saw the opportunity to get involved there, and so I bought a stake at the time, and it gave me some future rights that when Michael Jordan wanted to sell, we would kind of be first in line to have that opportunity. And it was something I thought would happen well into the future. It happened much sooner than I expected, but we closed that deal in September of 2019, and then as fast forward to the end of the end of 2022, and I think he was ready to move on. He had been doing this a long time. He had a lot of other interests in his life, and when the Phoenix Suns sold for an incredible amount of money to Matt Ishbia, it placed a price tag on the Hornets that was really great for him in terms of the investment that he made. And so it was up to me to put together a group to buy the rest of the Hornets, and that was quite a process. But we were able to finish that process, and we officially took over last August.
Amazing. Is it hard to look at a business like a basketball team straight up like a business without letting sort of the excitement of owning an NBA basketball team get in the way?
It's when we were going through this process, because I was involved for years, but as a minority investor, so I didn't really have any say in how the team was run, and I understood that going in. I was very much like a very passive from a distance investor. When the change in ownership occurred, it's like, okay, now we're really running this team. And, what somebody said to me was like, this is going to be so much fun. And like, obviously I knew it'd be fun. Like if you love basketball, it's great. You get to be around players and coaches and study and prepare for the draft and, the trade deadline and all these super fun things. I'd say it's a lot funner than I expected. I mean, it's unbelievable. And so, you're looking at it as a business or as an investment. But there's also like you're ready to commit a portion of your life to try to turn this team into a winner, basically. And I think as an investment, the NBA is great. The NBA has really good and improving economics. Like it's going to be announced probably sometime in the near future. It's a lot of headlines about it. But there's a new NBA media package, likely with Amazon and NBC and ESPN. And so, basketball is growing and how much people love it, and they love it around the world. And so the value of the content has gone up a lot, and that in turn has made, has helped the teams grow revenues a lot and made the teams more profitable. So I think it's a really good investment, but I also think it's something that is probably the most fun thing that I could do, but also hopefully make a lot of money.
Yeah. I don't know how many people have lost a lot of money owning teams in the last 2 decades, at least. Not many, right? What your group has a controlling interest, right, in the Hornets? So what role in operations do you or your group have? So,
myself and Rick Schnall are co-chairman of the Hornets. So, really in terms of the day-to-day stuff, we oversee both the business and the basketball side. Now, we have since over the last couple of months, we've announced a new president of the business. We announced a great new head of basketball. I mean, they're both great. And so, over the past year, we were very engaged in day to day. I think our objective over time is to be very involved as owners, but find great people that we think can help lead the team. And we believe we've done that. We've hired a new head coach, new head of basketball ops, and a new president, all within the last couple months.
Amazing. Charlotte is a city that's sort of a star on the map as a city. Right? Yeah. Lots of people move there, and there's been a real reshuffling in America in the last few years. Totally. During COVID, like we got you here, right? But lots of people moved to Charlotte. Actually, I have friends from Charlotte who left because they liked it more as a sleepy town, and it it became this booming, beautiful town. Yeah. We drove through it with my family a few months ago. We went to a hotel on the border, on the Virginia side of the border. Yeah. That's spectacular. I'll send you the details after. If I remember it, I would tell you now. I don't, but amazing place. And just driving through Charlotte, and what an amazing city, right? I mean, so much is happening there. How much does the success of the city impact the success of the team?
Look, I think, like Miami, I mean, we talked about before we got on the air how, Miami and Charlotte came to be, I believe, in, the same year, 1988. And, Miami was a small enough city at that time that it didn't already have an NBA team is pretty surprising. Now, obviously, Miami is one of the. If
you grew up here, you wouldn't be surprised. Well, it was a real sleepy place in '88. Yeah.
But now it's it's one of the premier cities in the country. I think it's the best city in the country after Charlotte. But it's I think over time, like your local revenues, your tickets, your sponsorships are a function of the market that you're in on some level. Obviously, you need to win basketball games but the better market you're in, a market that has population growth, a market that has a lot of corporate sponsorship and corporations that are headquartered there, those things can all facilitate strong revenue. So there's definitely a connection. You're in New York, it's the biggest market in the world. Like the Knicks are generally viewed as one of the most valuable teams in the NBA. So the fact that Charlotte, we believe Charlotte's a very different city than it was 10 years ago, and we think it's going to be a very different city 10 years from now. That should make Charlotte more valuable relative to other teams in the NBA.
Yeah, it can help you attract some players as well, right?
Yeah.
If it's a city they want to live in. And you see, like in soccer here, Inter Miami, one of the reasons they got Messi isn't because it's the best soccer team in the planet, because it's not. It will be. Well, it won't. But it's because of the city. His wife wanted to live here, and he wanted to sort of end his career living in the city of Miami. And I think Charlotte can see some of that. Basketball-wise, I looked it up. 21-61. That's how the team ended this last season, right?
Yeah.
So what are the big moves that are around the corner for the team to try to improve that?
Yeah, so obviously, not a very good year, but a lot of really good things happened. So it was kind of interesting. Like we had the second pick in the draft last year. It was Brandon Miller. Brandon's phenomenal. He's a 6'8" guy who can really shoot the ball. And he made the all-rookie team, was third in Rookie of the Year behind Wembayama and Chet Holmgren. And so we think he's going to be a star. So that was really important for us. One of the challenges this year was LaMelo Ball missed almost the entire season, and as did Mark Williams. And so two of our key starters missed the vast majority of the season. So that was significant. The benefits of that are simply we have a very high pick in this year's draft. And so between Brandon, a very high pick in this year's draft, LaMelo and Mark coming back, we start to form a core nucleus that we think can help us build the team well into the future. The other thing that happened is at the trade deadline in February, we traded Terry Rozier to the Heat. We traded P.J. Washington, who's played great for the Mavericks. We traded Gordon Hayward to Oklahoma City. But in turn, we took back, we got a couple first-round draft picks, a couple second-round draft picks, a couple young players that played really well for us in the second half of the season. So we go into next year with, a completely new coaching staff and a very young coaching staff that's very focused on player development. And we're very bullish on the staff that we've assembled. A significant number of future draft picks, including, the sixth pick in this year's draft. The knowledge that Brandon Miller, we think is going to be an all-star one day. And so, you start to have the building blocks come into place. And to be a great basketball team, you need great players. And so we're trying to position ourselves to get as many great players as we can. In turn, at the trade deadline this year, we probably short-term impacted the team negatively by trading Terry Rozier and Gordon Hayward. But over time, what we got back in value, we think will make us better in the long run.
Yeah, that's amazing. What do you, just quickly before we shift off of basketball, we're in the conference finals. How do you see the season ending?
Look, it's been an interesting playoffs. I think, I grew up in New England, so I know the Celtics team really well. I've watched a lot of Celtics basketball for many years. I think they're great. There's few teams in the league that can defend in the way that they can. They have two All-NBA defenders. They have Tatum and Brown. If Porzingis is healthy, they can play 5 out. They move the ball. They shoot the ball. I think they had the number 2 offense and number 1 defense in the NBA. They were historically great. And then out west, they're in the finals, right? So then out west, it's the Mavericks and the Timberwolves. And look, it's a good series. I mean, Dallas is ahead 3-1, but 2 of the next 3 games, to the extent they happen, are in Minnesota. So I don't think that series is over. Karl Anthony Towns.
It's 3-1 round, right?
It's 3-1. So Dallas had the chance to
close it out.
To close it out, and it's unique to be 3-1, where Game 5 is, for Minnesota, it's at home. And so if they win Game 5, suddenly it gets kind of interesting. And Karl Anthony Towns has shot the ball the first 3 games. I think it was 3 of 22 from 3. So he hasn't really played well at all, and the games have been very close. I mean, very, very close. Those games could have gone either way. And so we'll see. I think the Celtics will be favored in the finals, and I think they match up really well with Dallas if that's who they play. So my bet would be they win. But, there's injuries, things happen. Luka Doncic's going to be the best player in the series if he's there. So, I guess we'll have to watch and see.
It's tough. It's a fun season, and when it gets fun, that's when you start getting the FOMO that your team didn't make it into the conference finals, and they're not there playing. Right? As a Heat fan, a season ticket holder, that's sort of you're fine with it, with not making the playoffs. Not advancing the playoffs. Didn't have a great year, or did an okay year, but then you see this excitement, and you miss. We had so many years of LeBron and Dwayne Wade, and we're in the finals.
Even the last few years, you guys have made been great, been
with
great
young teams when it counted.
Yeah.
Exactly. So let's take a quick moment away from the show to recognize our first sponsor we've ever had at Standpoint with Gabe Groisman, the Wellness Company. Super excited to have them on board. The Wellness Company sells something called the Contagion Emergency Kit. Listen, for me, life is all about being responsible and taking care of my wife and my 5 kids and my large extended family. And part of that responsibility is making sure that you have the tools to take care of your family. When things go bad, when we've had pandemics, we go on a vacation, people get sick, you have to rush, try to find medications to take care of your family. I'm the son of a doctor, and I've always been taught that you have to have the tools that your kids need at any time or that you might need with you at all times. We all suffered it during the pandemic when we were rushing to try to get different medications. The Contagion Emergency Kit from the Wellness Company is one of a kind. It's a prescription kit. They get you a prescription from a doctor that you meet with, has all kinds of medications that you would need, the Z-Pak, Tamiflu, etc., a nebulizer, and you can rest easy knowing that you have the critical medications that you and your family need or may need at any time. Every house should have one of these. You can visit the website twc.health/Gabe Gabe, and use the code Gabe to save 10% and get free shipping at checkout. Check them out, and thanks so much to the Wellness Company for joining Standpoint. Accounted, yeah. Exactly. So lots of people are thinking, how do I know this guy Gabe Plotkin? I know that name. I know it from somewhere. Lots of people, everyone in the finance world knows you. That's obvious, right? From your days in Melvin Capital, the GameStop drama, etc. And then the Netflix movie that came out for Dumb Money, which by the way is not a reference to you. It's a reference to retail investors. For us non-finance folks that had to learn that. That's what the market calls dumb money. Is this retail investors, just people just buying stocks online like me. But Seth Rogen played you. We're not going to dive all into it. I'm not a finance person, like we say. I'm a lawyer in politics, but when you were a kid dreaming about things, you probably dreamt of owning a basketball team, possible. Yeah. First, I'm just going to go on a limb, as a young Jewish kid like me, first you dreamt of being in the NBA, and then you realize you probably have a better chance of owning a team than being on one. Yeah. Both very slim chances. Absolutely. But you probably never dreamt of having a movie where you'd be portrayed, first of all, by Seth Rogen. Yeah. First of all, let's not talk about the content for a second. If you had to choose who was going to play you in a movie, who is it that you would have picked? Seth Rogen probably wasn't pick 1, 2, or 3.
I would have preferred Ben Affleck, maybe. Mark Wahlberg, I don't know, anyone. But Seth, I got a lot of jokes about that. So he's, I guess he's an all right actor. He's not really known for his look, so it wasn't the best outcome from that perspective.
Yeah, well, the good news is when someone sees you, they say, "Oh, he's better looking than I saw him in the movie."
Yeah, I get a lot of sneaky backhanded compliments around that.
I think that's a straight compliment. That's a straight. You've got to take it. Yeah. So look, the GameStop thing was news all over the world. Something that even people that don't follow the markets closely, like me, saw it and saw the whole issue with the short squeeze, etc. But at the end of that, you ended up closing your firm a year later, and shifting. Right, so from someone from the outside, it's okay. This guy had a fund. It took this hit because of this once in a lifetime situation that happened. Definitely. How did you shift out of that era of your life?
Yeah, look, I think I was in the hedge fund industry for a long time. I started at 23, 24 years old. I was very lucky early in my career where I got the opportunity to be in charge of the portfolio. And this probably goes back to like 2005. And, we had a lot of success and I was very competitive. I was very driven and I didn't know where that success was going to lead me, but, I went to work for Steve Cohen. He recruited me and I was there for many years. And ultimately our returns there were really high. And so it enabled me to raise a lot of money and launch Melvin. And Melvin's returns were industry leading, up until what, the events that you mentioned, but to do that, to be at the highest level, you're going to make a tremendous amount of sacrifice. And it was a sacrifice that I obviously was willing to make. And I thought I owed it to my investors and to my employees. But in time, as you get a little older, as you have a family, that sacrifice gets really hard. Suddenly, I have 4 kids at that point in time. And I just realized I was really unhappy in my life, working every single Sunday for the last 16, 17 years, endlessly focused on every little aspect of the market. When you have $30 billion invested in the stock market, it's really hard to get away and do anything. So if I was at my kid's basketball game, I might be listening to a conference call. If I'm at my daughter's school event, I'm getting, up to the minute updates of how my portfolio is performing. And it just wasn't really the direction I wanted to continue to lead my life. And I was fortunate at that point where we had, I didn't like the way it ended, but we'd had tremendous success, and I could, do something that was, I still love to invest. Tallwoods is very active investing, but I could do it in a different way. I could do it in a way that I thought was more sustainable over time. I could do so without the distraction of outside investors and with a much smaller employee base. So, it was much more connected. And I could also do things like get involved in the Hornets. I don't think I could have been able to pursue that path had I still been running Melvin Capital. So, it was a terrible sequence of events at that point in my life, but I look back and with some perspective, and it was a crazy ride, and generally speaking, a pretty successful one. But in the end, moving to what I'm doing today, like it's a great blessing, and I've been really happy about it.
Yeah, it's amazing. I could tell you that, reputation's a big thing. And you went through that with an unscathed reputation. I mean,
Thank
people
you.
only have good things to say about you. First of all, personally, which for me is much more important
Yeah.
than any business thing. And you moved to this community, and everyone said, "Oh, this guy Gabe Plotkin's coming." I'm like, "Oh, isn't that the guy?" And they said, "Yeah, he's the sweetest guy. He has the nicest family." Like the personal reputation was there, but also on the business side. And you could see it because of the moves you're making now.
Yeah.
Right. So that says a lot about you. Life has lots of ups and downs.
Yeah.
We control only a small percentage of things
true.
in this world. Generally, I think the markets are the same. Right. You get to play in the markets in a way, but there's no way to actually control them. So the way you bounce back from it's incredible. So in your business now, tell me about the kind of investments that you're making and why I saw online. I think you're a partial owner of Rhone. Is that right?
Yeah.
Yeah, it's like a Lululemon competitor type brand.
Yeah.
I see them all over social media. So whoever's doing your online marketing.
Yeah.
Yeah. So what kind of stuff are you looking at?
So we, I have a handful of analysts that are with me at Melvin, and then I've hired a couple others, and we kind of have three areas we focus, apart from like Charlotte and basketball, which does take up some of my time. We continue to invest in the public markets. It's what I did for 20 years. Instead of having a portfolio with 90 short positions and 50 long positions, that it's really you're trading endlessly. We're just trying to buy stuff that we know over time will compound and create value. And so, we're much more tax efficient. We're much more patient. We're trying to make long-term investments, and it's been great. And focusing on it that way, on a given week, I might make a handful of trades. In the past, I'd make 50 trades a day. So I think that aspect's very different. And in addition, we do private investments, like you mentioned in Rhone. We've tended to focus our private investments in really growth-oriented consumer companies. Consumer is like the first area of the stock market I really learned. So whether it's like restaurants or consumer products or footwear and apparel and things of that sort, like that's where I've always felt most comfortable, and I feel like my knowledge base is really high. We also do software and industrials and other things, but consumer is something I know intimately. And so, we own a fairly large stake in a salad chain called Just Salad. There's one in Brickell, actually. And we think Just Salad is going to be a big time business. And, we expect, looking out a handful of years, you'll see it in the public markets. Rhone is another one. We're also invested in, Feastables, which is Mr. Beast chocolate.
Oh, yeah.
So Mr. Beast obviously has like 200 million YouTube followers.
By the way, Mr. Beast, if you're listening, just a few of the followers, just a few of the listeners.
Yeah, he's got a few more people when he speaks than I do. But look, they hired a great CEO from Mondelez, and with his brand reach, I think there's an opportunity with what they've created. To go after the candy market, and we think it's going to be really big. And so it's things like that. It's we've probably made 7 or 8 investments. And then in addition, I have a partner that we do real estate together. So real estate was something. When I was running my hedge fund, it was like I was so focused 24/7 on everything I could do to drive that business. Now I have the ability to have some focus on some private investments, do some things in real estate, which are much more longer term, but to try to create sources of income. and then be able to focus on the Hornets. So it's much more kind of like diverse how I spend my days now.
And how does your life look like when you're talking about your family and being actually present with your kids and your wife compared to when you were running the hedge fund?
It's night and day. I mean, it's great. Like my weekends are with my family. I never really had that. And, when I get home from work, like if my daughter wants to play basketball or tennis, or my son does, or helping them with math homework or whatever it is, like I'm there, I'm with them. And, if my 3-year-old needs a bath, like that's the best time, and it wasn't like I didn't engage in those activities before. I just didn't feel like I was present. I might be on the phone. I might be trying to deal with other things. Now I'm there, and obviously your kids notice. And so, that transition has been awesome.
Yeah, I catch myself, and I'm nowhere near as busy as you were when you're running a hedge fund, but I do a lot of different things, and I catch myself not being present. And actually, I was speaking in Mexico City actually for a conference there, and they had all these motivational speakers. There was 10 speakers throughout the day. I spoke on confronting anti-Semitism, but
a lot to confront.
A lot to confront. But one of the speakers before me, I never listened to motivational speakers. I don't read self-help books. That's not my thing. But I had to sit backstage and listen to all these speakers. And one of the speakers said something that just like stuck with me. And I came home and I told my wife immediately. And it was just so perfect, so simple. But he said, when you're doing a task, do that task. Don't do anything else.
Yeah.
So if you're working, just work.
Yeah.
If you're with your wife at dinner, just be with your wife at dinner. If you're with your kids, just be with your kids. And like, it's such a simple concept. Actually, when he said it, I was like, eh. And then it just started clicking. I'm like, hold on, he's right.
Yeah.
And I catch myself now. I'm not saying I've changed the behaviors yet. I'm working on it.
Yeah.
But at least I'm thinking about it. I'm sitting with my kids. I'm like, wait, it's time to be with my kids.
Right.
Yeah. So that's a huge thing.
It really is. It's hard. Like you gotta have the discipline to do it. And I think in today's day, look, when you see people gathered around, especially younger people, but anyone, like all people, it's like they just take their phone out. And so like you're with people, but are you really with them? And I think it's just something that's kind of a function of society now, but it's definitely something that, to be truly engaged you get a lot more out of it.
Yeah, for sure. So listen, our audience is a lot of people who engage in politics. In politics and in the news, there's a lot of talk about the markets. There's a lot of talk about the stock market going up today, it went down, right? What impact politics and government has in the markets. And also, there seems to be a big disagreement on what role the market plays related to the economy, right? If the market's up, does that mean that the economy is in a good place?
Yeah.
A week ago, all the press was about obviously from the Biden administration that the stock market's up, everyone's portfolio's up, which means the economy's good.
Great,
Meanwhile, everybody feels, all the polls show that they feel like the economy's terrible, inflation is up, everything's more expensive. What role do you see politics and government playing in the economy, in the markets?
Look, there's kind of like long-term trends. There's also short-term trends. I mean, like, when Trump came in and he lowered taxes on, domestic companies, he lowered taxes, for the American people. Like, I could see, mathematically, you could see how much more that meant in terms of your take-home income, right? And also what it did for companies' valuations because they were paying less in taxes. So obviously they had more money that they were making. So policies matter. They matter a lot in certain industries, healthcare clearly being one, defense, being another. But policies always play a huge role. Longer term, there's huge structural things happening. The fiscal deficit, like it's something that's sort of been accepted for years. I think the dynamics are changing where, the country, I guess under Clinton was probably the last time we had a balanced budget, sometime in the 90s. But, we've always incurred debt, and, typically China would buy some of our debt, Japan would buy some debt, other people would buy debt. But the amount of debt we're incurring and, the interest costs associated with the debt, they're exploding. And, you need to keep finding more and more buyers. And so I think, we just came off a decade, 2010 to 2020, with unbelievably low interest rates. Obviously, that's that's not really government policy, but it's monetary policy. Going back to that period feels a lot more challenging given how high the budget deficit is and the need to issue that much treasury bonds and trying to find buyers of those bonds because those buyers are going to want higher yields. And so like that's the concept, in macroeconomics, it's called crowding out. And I think it's a reality at some point. I mean, neither candidate in this, we're not really structured politically to like really care about the future as it relates to fiscal deficits and things of that sort. You're much more focused on today. And so like, one of the reasons, even under Biden, because okay, the economy's been great or the stock market's been okay. There's been some offsets with inflation, but yeah, the government has spent incredible amounts of money, incurred incredible deficits. So that does theoretically help today's economy, right?
But it hurts tomorrow's economy.
But yeah, it hurts the future. And so there's always puts and takes. And so like, I don't find it to be necessarily, that informative to look at the stock market as to how a president performed. It depends the starting point. Under Obama, those were great years, great years to invest, and they were great years in the stock market. But honestly, the biggest reason was the economy was so weak, the lack of job creation, the regulation. It was such that like it actually meant the Fed had to really keep interest rates incredibly depressed. But with such low interest rates, that fuels the ability to invest in things without having to incur a lot of costs. And so that was great for the stock market. It was great for venture capital and private equity and different things. And so it's not always that connected. If the economy is really strong, that often is bad for the stock market because it might mean inflation. It might mean higher interest rates. And so people look at it like it's a direct correlation. And look, over time, I think the U.S. stock market's been great because the U.S. economy is generally well positioned. But in windows of time where presidents want to, whether whoever you like, when they try to say, okay, look what I did for the stock market, it's generally far more complicated.
Right.
Yeah.
It's always more complicated. Listen, but when you think about Biden, when he printed the amount of money he printed and put in the pockets of Americans, and just anecdotally, you say you're into consumer markets and consumer goods, you saw people running with the money that the government sent them straight to the stores, to luxury stores, especially by the way, 100%. to buy accessories, which is interesting. They weren't buying the $5,000 purse at Louis Vuitton. They were buying the couple $100 belt or shoes or whatever that they can afford. Spending that money, which did a few things. One, from where I sit, it was good for those companies, for the LVMHs of the world that own these retail stores that brought people in, but it also drove people into credit card debt because people can't just spend what's in their pocket. They have to spend.
It took a while to get there, but they're there now. Yeah.
So I mean, the numbers on I don't have them offhand, but I know that the number of the amount of credit card debt that Americans hold now is higher, I think, than it's ever been. Yeah. And now they've been talking about it for a few years. Yeah. And now it's getting to a point where people are defaulting on their credit cards, and that's where you're seeing the crumbling come around the corner. But I think Americans keep thinking, well, the White House or the government will just keep printing money. And it's funny, in a way they're not wrong, right? They keep sort of floating the economy.
Yeah. Look, first of all, like whoever's in power generally doesn't like a weak economy. And so you've seen the fiscal response at times and the monetary response be so powerful that it's overwhelmed. When you go back to 2008, they don't want to go back down that path, of a recession like that. The biggest mistake just in terms of like the economy, look, we were going to have rampant inflation irrespective. Like you go into COVID and a ton of people left the job market. So you had a lack of jobs. The other thing that happened is people ended up saving a ton of money because they couldn't spend it. They couldn't travel. They couldn't go to events and restaurants. And so, the savings rate jumped to incredibly high historical numbers. And, but then the government also started handing out checks. Like, the last stimulus package, like we were coming out of COVID and there was so much pent up demand. People wanted to do things. And in March of 21, they handed out, a significant number. I can't remember the size of the package. I mean, it was enormous, right? And so, that money really fueled the economy and kind of like set inflation into hyperdrive. And that continued. And, now, we build all these models to study the consumer. And like our assessment is like, we're kind of back to normal. Like all that money's kind of gone. The job market's like kind of balanced itself out. Finally, people have come back into the job market. And you're right, credit card debt is the highest it's been. Some of that is just overall, there's been inflation, so inherently that's going to be the case. But look, it's you're seeing a lot more defaults, and the rate on credit card debt is obviously unbelievably high. And so it's not a great dynamic. I think the economy is not. It's going to be pretty volatile, looking out the next period of time. And because rates have stayed stubbornly high, just because some of the inflation indicators have been high, some of that lags. But, it's the first time like since COVID where it's much more obvious to me that the economy, all these tailwinds that the economy had post-COVID, because we lost so many jobs because of COVID, right? And so things like lodging, healthcare, education, like it's taken a while to like fill those jobs back up, and now we're back to normal. We're maybe above normal, and meanwhile that savings you talk about, it's like it's gone, relative the excess, and so
right.
So now it's the economy is moving back to normal, which is a good thing. It's why we've had higher interest rates, but I think it's doing so more rapidly than maybe people think. I don't think it's terrible, but it's more rapid.
Last thing I'm going to ask you, just out of respect for your time, is I'm big on foreign policy. For me, people who don't look outside of our borders don't have their eyes open, right? Everything that happens around the world impacts us here, not just geopolitically, but also even economically. And even those things cross over a lot. And when you're talking about consumer goods, China comes to mind, right? And how dependent we are on China, especially in the consumer industry, but also in minerals and different things. So what role do you think, if let's say Trump wins in November, which is my prediction.
Okay.
January, he starts in office and he starts getting strong on China again with implementing actual tariffs and sanctions and things of that nature. How do you think that impacts? Do you think finally the onshoring trend continues in the United States and we start really bringing manufacturing back home, so we decouple from China? Or do you think it's really going to take a big hit? Is the economy going to take a hit because of that?
I think it depends on the magnitude. I mean, China is interesting in that, there's the consumption component of China, where for years China was supposed to be, middle income people that were starting to get more and more wealthy. And so if you're Nike or Starbucks or whoever, like China's a market, Lululemon, like you got to dominate luxury goods. And that's really hit a wall the last couple of years. Like the Chinese economy has been really weak. Like you always see these reported numbers out of China, and it just doesn't feel like that's really what's happening.
You're talking about selling into China.
I'm talking about the Chinese
market.
Consumption of domestic companies and the impact that's having. And then there's just like the general nationalism where like Apple, Chinese government doesn't really want you buying Apple. They'd rather have you buy Huawei, or like, Nike's and Adidas have started to compete a lot more with local Chinese brands. So, I think the economic ties, that's one part. It's not directly what you asked, but the economic ties, have already weakened quite a bit over the last, since Trump was president. I think if he were to enact a significant number of tariffs, it would certainly, I think, like companies are more prepared for it today, where they've already moved a lot of production in different places. Vietnam's been big and Mexico's been big, and it depends what industry you're in. It would be disruptive. There's no doubt about it, but it would probably lead to more onshoring. I think ultimately the concept is good. I think focusing it on certain industries probably makes more sense. I mean, there are industries where, production from China is really important. And the alternative, like we don't need to be like sewing apparel like in North Carolina. Like I'm not sure that makes a lot of sense, for American workers. So it just depends. But we'll see.
By the way, it's interesting you choose that, because I have friends with a family that they're the second biggest zipper manufacturer in the world, based in North Carolina. Over 100-year-old company. Their only competitor is YKK, which is not just Chinese, or they're somewhere in Asia, but they're a domestic company selling their zippers here in the U.S. But yeah, you're right. There's a need for a global economy, that's for sure.
Absolutely.
But there does need to be a balance. I think that was kind of the biggest thing for most people that Trump put into, when we're talking about this topic, put into focus, was the effect that sort of this globalized economy, while there's a positive to it, there's a big negative to it. And we were talking about last week, I had John Bolton, the ambassador, on, and we were talking about China. And I had read this book, I don't know if you read it, called the 100-Year Marathon, about the Chinese plan so it's interesting. It's about the China's China plan to take over the West, mostly through economic means. But then you see story after story of them stockpiling minerals and stockpiling grains, copper, etc. So, what's the purpose of that? And at some point, that's gonna come to a head for us here.
Yeah, and look, like U.S. energy policy is really important in that regard, and the role that they play. And you asked about, politics and what impact it has. Yeah, if something happens with Taiwan, and you look at, other wars going on, obviously around the world, like our foreign policy, you can go through an entire term, it doesn't really matter that much to the market, and you go through a period, it could be incredibly important to the market. And so, we'll have to see where that goes. But it's, China, Taiwan's a major thing.
Yeah, our last several presidents, their terms, it's been very important for the market. And just Taiwan, I guess we'll end on this, but I don't know if you saw this week, there was a new president installed in Taiwan. And in the 3 days after he took office, China did a full military exercise on taking over Taiwan, all around it in their airspace, and they kind of had to sit there and just watch them do it, right? So that's a risk not just for the people of Taiwan, but for the world economy, right? And the world order, really.
Yeah. No, it's like, when you think about Russia, Ukraine, and that had real implications, particularly in Europe, because of how much they were relying on, Russian natural gas and oil. But, TSMC, where everyone gets all the chips from, like, it's massive. I mean, it's all the chips in the world, and it's in Taiwan. And, we're trying to, the CHIPS Act and doing different things to increase production of chips and design of chips, like, outside of Taiwan. But that, that's like we're so far behind. That's a decade kind of investment. And in the interim, like, it does reside right next to China, and China's running military exercises. So it's without a doubt like a black swan event risk for the market, and something like you just kind of hope doesn't happen, and you got to prepare yourself if it does. But it's something you got to think about.
So I'll close by saying that the way I look at all of these things, whether it's politics or economics, finances, etc., they're all super important. We have to be involved. We have to try to impact it in the best way possible, for ourselves, for our families, for our communities, for our society. But the first most important thing is our families and the community that we have around us, and building, raising our kids in the right way for the next generation, which sounds cheesy until you have kids. I've got 5, you've got 4. Right. And that's really what I try to always keep in focus. And obviously you do the same. So Gabe, thanks so much for joining the podcast. I really appreciate you being here, talking about all these cool issues and interesting times. And I think your story, we didn't even get into your background and how you're self-made on how you got into into the finance market and how well you did. But also, your story through GameStop, how you got through it so elegantly, really, and just continued pushing forward, focused on the right things. And you are where you are, and I can tell you're my age, which means you have a long road ahead of you. And I know it's going to be filled with success, man. So thank you so much.
That was awesome.
Thank you, everyone. Thanks everyone for listening, for signing on. Make sure to subscribe and follow, and all the cool things you do to support podcasts. Thanks.